Yo, what's popping? It's GSM, and you're welcome to this channel. If you are new, you can even subscribe, you can even share, you can even tell your friends that you have this channel, and also you can just convince them to join. It's not bad because you don't pay anything for this. It's all about showing your support. That's something very important, and I'm happy. I've already reached the 1,000 subscribers. I'm so happy. I'm happy that much, and I thanks to all that tried on their level best to share this channel to different people, and I'm happy for their cooperation, and I promise you to give you most valuable things because it's the beginning at all. So I promise you good things in the coming days, right? So then today, we're gonna discuss about the trade that I took, the trade that I missed, and I'm here just to show you to make you to learn something in here, right? Trying to make you something in here because yes, sometimes you can say I'm even your teacher, you're not bad, but yeah, sometimes we get messed up, sometimes we miss, sometimes we get break evens, and all those stuffs are happening to the market, and I can even I can say like uh I can even promise you that to miss or to get stopped out or to get break even or to get the right trade into the targets, yeah, that's the part of the game. And how you should handle the loss, you should count loss as the expenses of the business because every business apart from trading has its own expenses. So loss is the part of the expenses. And in normal knowledge like economics or something, if you have a lot of expenses rather than the income that you have made in the whole month, we count that as a loss. If you have great expenses than the revenue, then you have a loss. So always count loss as the expenses of the business because the expense of the forex market is the loss, but the loss should never exceed the profits. That's how it is. If you can get 6 trades out of 10. Okay, if you can win 6 trades out of 10, that's more than enough. If you have 60 percent win rate, it's more than enough. If you have 50% win rate, that's also good because if you have, let's say, 50% win rate and maybe your risk reward ratio is 1:5, okay? So let's say maybe in every single trade you're gonna lose maybe $10, all right? So it means that after 5 trades, you have already lost $50. But the 5 trades that goes into your targets, then you have almost because every single trade you lost, the loss of every single trade was $10. So ten times the risk reward ratio, which is 5, is 50. So if every single trade you get $50, means that 5 trade will give you 250, right? 250. And if you minus the loss that you got from the 5 trades, which is 50, then you remain that $200 as the profit. So it's all about risk management. It's not all about having the bigger win rate. No, if you have the 50 to 50 win rate, it's also that more than enough. If you have even you are hunting for 1:4, that's also good. So it's all about having the solid risk management. That's what makes us to stay on the game, nothing else. Right, so let me jump into this. I don't like to talk that much, and I don't need this video to be too long, but pay attention to this. This week, for sure, gold was not that clear. And most of the time, I usually combine SMC with Malaysian SNR, and I use Malaysian SNR on just finding the proper POIs and all other stuffs. So this week, the gold was not good. So what I tried on my level best to do was this. I just tried to go with the weekly storyline that was created here, and I get even stopped out. I get some entries and other stuffs. Let me show you this. I had this weekly reject to weekly in here, right? Weekly reject to weekly in here, and as the result of weekly reject to weekly, we had the daily breakout created in here. Okay, you can see on the line chart, we have the bearish breakout in here. And also the swing low was broken, that's fine. So after this breakout, I told you you have to go into the another lower time frame just to see the range that was created so that you can, yeah, you can even decide what to do. So on the 4 hour, we had the trading range that was created, right? We had the trading range. The trading range that was created was the range from the range that took out all these liquidities in here, I can say, and then it broke structure. This was the strong high that was created. Strong high that was created on the 4 hour. That's good. And also we broke the swing high like this to confirm the trading range. After having the strong high, we broke this swing high to confirm the trading range. So marking this out as the, oh, I think network is lagging or something. So let me check what is happening actually. Okay. All right. So we had this strong high that was created and the weak low that was created. And what happened is this counter trend on the 4 hour turned bearish in here. Counter trend turned bearish. Not here. This was the only rejection. Here is the moment we block this counter trend. So after the counter trend has been broken to the downside, then what next? Then what next? If the counter trend do the same thing, if the counter trend here do the same thing as the major trend, what the reference behind that? This means that the market maybe wants to go up. Well, wants to go down, of course, not up, because the major break is bearish, counter trend also turn bearish. Maybe this is the time for expansion. So I was expecting to sell this stuff. So then I told you after the 4 hour create the strong high on this time frame, you have to go into the lower time frame to see maybe the 1 hour to see the range that was created. And here is the moment like these things are getting interesting right now. Okay, we had this on the 1 hour. On the 1 hour, we had this strong high created, the high that took out the liquidity, and then it broke structure in here. And then what happened? The swing high got broken in here. So which means that now the range that has been created is from this high to this lows. We don't have internal range liquidity from this trading range because you can see we have only an imbalance and we don't use imbalance. And I told you from the beginning, remove the imbalance out from your equation because they are not even relevant. Not they are not even good. We don't need them. So what next? I just try to go into the higher time frames and then check the POIs that has the POI that has been created for me to sell. So the POI that was created in here, I had so many POIs from this range up in this highs to this low. I had many POIs because we had even this. Okay, the left shoulder that was created. I had even this left shoulder that was created also. I had even this the apex. So this A shape that was created, the resistance. So I had many POIs, so I just go into the hard time frames and then check what I have. On the hard time frames, I made with the resistance that was created in there. Oh, sorry, in here. So I just deleted all the zones and then made it with one. Okay, so what next? Because I know, because now I understand, maybe the next zone of interest, I can do the refinement of this zone, slight refinement to the 1 hour left shoulder in here. Then I said that if the market wants to reach up here, so I can maybe I have to wait until the market goes into these areas and then I have to sell it. Okay, so the problem that I didn't even find the entries that was coming from these areas. That's to look for buys until to get into these areas. That was the problem, and that's today I told you I'm teaching you how to go with it because you have to understand the key levels. The key levels and the liquidity are the ones that runs the market because the next key level is here. So it's not a bad thing for you to buy this stuff into these areas because you understand if you're gonna manage to buy from this lows to this side, then you're gonna have 150 pips, which is more than enough. So for me myself, I didn't know what was going into my mind, and then I didn't even deal with this bias. But now I want to show you how the things was, because now the 1 hour has created the strong low, the low that took out liquidity, and then it broke structure. So what do we do after this strong low has been created? You have to go into the 15-minute and then see the trading range that has been created. On the 15-minute, we had this trading range. Of course, we had the Asian range first. Asian that's this time. We had this Asia. Asia was created in here. So what next? If you have the Asia, you have to put into your mind maybe the Asian lows will be the liquidity. So, and this is the low of the range because these lows took out liquidity. Okay. And then the structure was broken in here. The structure was broken in here, and another structure was swept above these highs. Okay. So means that if this is the low of the range, what next? We have after this creation of this trading range on the 15th. Remember, our intention is to buy this stuff from these lows to go into the highs. Okay, that's our intention. So I just go into the file and then check what has been created in here from these lows to this highs. Then I see in first we had this. Okay, left shoulder that was created in the apex only. That was created in there. And then what next? The timing was not good at all. Okay, the timing was not good. So if we have this range from this lows to this high, and now you have the POIs marked out, maybe you can buy this stuff hunting these highs. Okay, that was the first entry. Remember, for me, I'm just trying to sell this stuff in here, right? I'm not engaging on buys. I'm just showing you what the market has done, right? What the market has done, but I didn't even get into this. I have to admit that. Why should I lie to you about the entries that did not I didn't took, right? So then the timing was not right because now it's running into Asia. So if you're gonna manage to get into this, maybe the stop loss was 30 pips stop loss. Okay. So since the stop loss was covering the both POIs, you don't need even to have the like you have one stop loss in here. If you got you're gonna stop the out and then you do this now. Don't do that business. Okay, that's the problem of a lot of trade of retailers. Okay, if they have maybe PO main like 3 to 4 POIs, what they always do, they buy on the first POI, get stopped out, another POI gets stopped out, another POI gets stopped out. If the market stopped maybe the extreme POI and then started giving them the reaction, they have nothing into the pockets because they lost 2 of them. So most of the time, if maybe you have 2 POIs that are close to each other, and then maybe the stop loss cover both of them, just do that because now you have even 1:5. That's isn't that enough? Isn't that because you have to exit into this external, right? So what happened is this, tap there, and then you are done. Okay. Remember, I have an idea of selling this stuff in here, right? So what happened is this. I had even I don't want to even show you because I get stopped out very fast. See what happened? Not even a reaction. Not even a reaction. And then oh, see what happened. Oh, okay, this highs got taken out. This high is getting broken. Now I knew, okay, maybe now the market is hedging to go to the upside. Okay, this maybe I was get induced. Okay, I get induced by these moves. So now let me try to buy this stuff. Okay, this is the moment you have to put the flexibility because now the stronger this high has been broken. So what do you do? Okay, what do you do? Okay, what do you do? So these days, after breaking these highs, okay, after breaking these highs, now I knew, okay, now I have to look for buys. Okay, now I have to look for buys because now the market is no longer respecting this stuff. Okay, maybe the market now is hedging to go above this size. I will show you what the entries that was coming from here, the entry that I took, and then I get into break even. I took some partials, and yeah, break even that's coming in. Okay, so what happened is this. Now on the 1 hour, the strong low has been created. The low that took out the liquidity, and then the major structure got broken in here. So how do we know the strong low has created the weak high? Then this formed right here. This formed right here. Okay, next, okay. Again, I didn't even took this entry. It played out, okay, on my eyes, and then I don't know what was running into my mind, and then I didn't even take it. But I'm showing you, sometimes you have to learn from mistake, okay? That's why we have backtesting and journaling. That's something very important. So what happened is this: after this break, now we know maybe you have the range from this lows to this high. So after this range has been created, just go into the higher time frames and then you find what was coming from to this area. So if you try to go into the higher time frames and then see what was coming in, you can even see on the 4 we have a lot of things to pay attention to. Okay, because the strong high was created on the 4, you have even this on the 4 itself. You have you can see you have even this on the 4 hour. Okay, on the 4 you have even this. On the 4 you have even opening close level that has been created in here. So many zones. So if you try to go into the daily, maybe the guesswork is over, because if you try to go into the daily, you have only POI that has been created. This one. This one. Or if you maybe you're afraid of that, we have even this. You can see resistance broken, turn to support. RBS. So on the 4 hour, we had that one, and this is prayed around on the right time. So what happened is this: we had those POIs marked out. The market runs above like that. Top here, this was the New York close. Okay, New York close. As long as you can even long position, the entry was coming from there. The stop loss is about 30 pips stop loss, standard stop loss for gold, and then where are you targeting? This size. Again, you have 1:5, and then where you can even target this highs also as a final target, because those highs won't hold anymore. So see what happened. On the targets. Okay, these are two entries that I didn't even talk. Okay, the next day was, I think it was maybe NFP or something. So see, it was like not NFP. There was some kind of news on the next day. I don't know what news. There was some kind of news. Then what happened is this: after taking out this liquidity, now maybe the market is hedging to go to the upside, and maybe the 4 hour range is being respected. Yes. Now we have to remove the mindset like maybe this size we hold. So above it, what we had. So above it, if you're gonna check on the daily, because this was the high of the range before, and this was the low of the range on the 4 hour. So I took direct trend into this opening close level, thinking that this could be the end. This could be the end, and maybe the market will react and then sell. And then it was lining up with the 4 hour with the 4 hour. I can say 4 hour something created on the 4 hour. Maybe you can even see this support to broken and turn into resistance. So I was having this entry marked out, and then I managed to get into it, and then see the reaction that was coming from that level. You see, remember now I'm using the 4 hour range. This is the 4 hour high that was created. 4 hour low that was created. This is the high. This is the low of the range. Maybe this could be taken out as the internal range liquidity or something. And I was having this idea of selling this stuff in here. So see what happened is this. Top there, see this sharp reaction. And then I moved into break even after breaking this swing low. Now I said, okay, now maybe the market is hedging to the downside, right? So let me have this marked out. Then I was having this. I will show you that entry. Here's 30 pips stop loss. Even this, it's 1:6, and now I was targeting these lows. These lows, because now the intentions of the range was already completed. So I was even targeting these lows. I cannot show you hindsight examples, okay? I cannot show maybe things that or maybe run into the profit. No, I have even to show you what happens into the live market, okay? You cannot say maybe every single time you get what you want into the market. No, sometimes we react, but sometimes the market can do weird things like this. So we don't quit the job, but we have to learn from it. That's how it is, okay? So after this, then I knew maybe the market is hedging to the downside. And now let me show you that the real entry. Maybe you could even understand me better. Let me show the real entry where it was. Okay, now you can even see. Do you see why I tried to do you see that was the sale entry? I see right there. I got a sale from right there. then say I was like selling this stuff into to the downside. That was the thing that I was expecting, and then see what happened. See what happened. Uh, see what happened. This shit's happening again. It goes down, then it stopped out. Stopped out. Sometimes those stuff happen. And then I quickly realized on the monthly, we had, remember, this was the end of the month. Now, if you go into the monthly, we had the monthly level that was created. Okay, let me go into the monthly and then show you the monthly level that was created. On the monthly in here, we had this level created. See this? The resistance was created on the monthly. During the NFP day, during the day of NFP, we had this resistance created. Let's see what happened. On the 4 hour, this resistance was above the strong high. I was having this area marked out, and maybe because it was like, because on the 4 hour, you can do even slight refinement of that zone into the 4 hour resistance in here. That's fine. I was having this area marked out, and then I didn't even know if it's gonna pay or not, because now I even lose the hope to see maybe this high get holding the price, because the price is showing up the willingness to go to the upside. So we can never force the price to do whatever we want. So see what happened. The market goes up there, tap during the NFP, okay? Tap during the NFP, and then it did this. It didn't tap during the NFP. I think it was the next day. I think it was the next day where it did something like this, and then it dropped. And now see where it is reacting from. I was expecting to see this reacting from here. So current now what I'm expecting on gold, because now I have got the actual break, because this was the sweeping of this high, but now I have the actual break in here. So this time I can expect it to see the market maybe dropping. So what the idea do I have? Because currently we have let's say on the daily we have daily rejected day created in here. This was the break. We have daily rejected day created in there. So if you have the daily rejected day, you know the problem. Okay, even below it, we have the daily rejected day here as a support. No problem with that. If it's rejected twice, no problem with that, because you go into the area where you have the breakout, and then you can even see the breakout is also only bearish. We don't have the breakout in this area, so completely removed it. So we have this zone created in here. After this breakout, maybe the range will be created on the 1 hour time frame or something. So if you go into the 1 hour, you have the strong high that has been created, even though it's the Asian high, the strong high that took out liquidity and then it block. How do we know the high has created the low? We have to break the swing high to the upside. Okay, so now what do we have as the liquidity? We have this actual order block act like liquidity, and above it, what do we have on the far? We have a bunch. Okay, see, this one was already used by this week, so we don't expect this maybe support broken. This support that was broken to play as a resistance to play out, because it was already tapped. Okay, so I can even expect this zone in here to play, or this zone in here to play also. And if you're gonna check on the daily, what do you have on the daily? You have only resistance that has been created, or you can even choose to have this zone. So let's have those two zones created as the high time from key levels. So this time I'm expecting, if the market will do that, I can even find this one, the above entry into this resistance on the 1 hour, which seems to be fresh. If the market will reach there, remember, even this some kind of probability. If the market will reach up there maybe by tomorrow, if the Asia gonna create this liquidity, then London will eventually do that. So let's have this entry marked out. So I can even have this. Where's the 30 pips stop loss ending? We have this 30 pips stop loss created in there. Okay, the 30 pips stop loss cover the both entries. So we can have these lows as the external range liquidity if the market will need to do that. So you can even target these rows. That's the trade that I'm looking for into this week. It can be the more than enough trade. So let's have that idea in mind. So for today, that was the trades that I missed, the trade that goes into break even, and the idea that I have. So I hope hopefully you learn something into this video, because I promise that I'll continue to share, to like and comment. That's good. So, and other students that are asking me for mentorship, I think the slots are, I don't have maybe slots for February. So if other students, they want that, maybe they could go for a March mentorship. For this time, the slots are over, right? So no more DMs for February mentorship. Okay, that's how it is. So have a nice time. Bye bye.